Hey, welcome back. Three market stories today. And together, they tell you a lot about investor mood in Korea right now. First, KBank. The digital bank went public last month and has been struggling. As of April 17th, the stock sat at 6,310 won, about 25% below its IPO price of 8,300 won. The core issue is profitability. KBank's assets are roughly 40% of KBank's, but its net profit is only 23% of KBank's. Net interest margin collapsed from 2.4% in 2023 to 1.4% in 2025, largely because KBank holds a large pool of Upbit crypto exchange deposits, and rising interest rates on those deposits drove up funding costs. This month, Samsung Securities became the first Korean brokerage to issue a formal buy rating, setting a target price of 9,000 won. Their view, the profitability concerns are overdone, and NIM should stabilize as the business scales. A separate analyst at Korea Investment Securities flagged the Upbit relationship as a potential gateway into digital asset banking, including stablecoins, if Korea's Digital Asset Basic Act framework develops further. Next, the KOSDAQ. It's been on a 6-session winning streak, climbing from 1,076 on April 9th to 1,170 on April 17th. Notably, it kept rising even on days when the KOSPI fell. The 1,200 level is a big deal. The index hasn't closed above that since August 2000. It touched 1,200 intraday twice earlier this year, but couldn't hold. What's driving it? Easing Middle East tensions boosted global risk appetite. Individual investors net bought 1.26 trillion won on the KOSDAQ this month alone, after net selling 727 billion won last month. New active KOSDAQ ETFs, including Samsung's KOACT at 1 trillion won in assets and Timefolio's Time at 498 billion won, are also providing supportive flows. Analysts say breaking 1,200 for real requires earnings to back it up, not just liquidity momentum. Finally, a quick note on the Korean ETF market. Han Dong-hoon, Asia head at US-based Amplify ETFs, said in an interview that global fund managers now look to Korea first when designing new products. He noted Korea's speed at reflecting new investment themes is unmatched. Amplify's flagship DIVO strategy, which blends dividend stocks with a flexible covered call overlay, was localized by Samsung Asset Management into a KODEX product that now holds over 1.5 trillion won, driven primarily by retirement account inflows. On AI investing, the Amplify team favors equal weight exposure across the AI value chain over concentration in the largest names, citing better volatility management. That's all for today's deep dive. We'll be back with more insights. You've been listening to the Korea Economy Brief, straight from the front page of Seoul Economic Daily. Thanks for tuning in.